The following is a presentation of TFNN. The Morning Markets Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. 24 minutes to go until the start of trading, and we have markets in the green right now. Dow slightly in the red, but S&Ps, we surged higher yesterday. Intraday, we hold those highs. We're up by about 10 points right now, 7,013 on the S&Ps. NASDAQ 100, we're up by 109 points. Okay, and yeah, you talk about a low to high. And a two-way market yesterday into the lows early at about 2 a.m. You accelerate higher. We were high by 10 in the morning, and we're just above that price level right now. But you're talking about almost 800 points off of those lows from 25,180. You were briefly above 26,000 at one point. We're up by 0.4%. As I mentioned, the Dow slightly in the red this morning, off by 49 points or 0.1%, 49,476. And the Russell right now, positive by 10 points or 0.4%, 2660. We jump over to yields this morning. You got the 10-year right now, lower price, higher yield. It's not stopping. Look at this move. Since Friday, on Friday, you were at 112.02 the high. You're at 111.14. You have a low out here from January 20th of 111.09, and we got a 10-year yield of 4.3%. 4.3%. You jump over to the dollar right now. DXY, when you get higher yield, you got some dollar strength. 97.66 right now on the dollar. You jump over to crude, 62.58. We had a drop in crude yesterday, but still well above where we've been recently. Crude trading up 46 pennies, and we jump over to metals. So we're catching a little bit of a bid today. Gold up almost $300, 49.47. You jump to a 15-minute chart. That was the overnight low on Monday. This was the intraday action yesterday, where you're between about 48.20. You came into the close about 46.80. You spike higher in the 6 p.m. open on the futures. And since then, we've drifted higher. We're right back to where we were at about 3:30 a.m. this morning, with gold up by $300 on the session as we approach 5,000. You jump over to silver right now. Silver up $10 at 87.63. And I just encourage you to have some caution in this market, folks. It is quite a volatile market. We're $16 off the lows of $71 overnight Monday. And you are currently $12 off of where we were at 11 a.m. yesterday. But we got extreme volatility. One of the stories we'll pull up talking about gold trading like a meme stock, not like an equity. And you better believe it, folks. Okay, down more than $50 from Thursday to Monday, and since then we're up 16. Down 30, up 16 on silver. And gold, you're talking about almost $1,200. And this type of volatility usually doesn't go in a single day. You know, if you're at your computer and you're trading and you're watching those numbers almost constantly, it's great. But make sure you're watching that market if you're in it, because I don't think a lot of traders knew when gold was at 5,600 and change on Thursday that they had $1,200 of risk in gold. Okay, now we got quite a bounce going on. As we're drifting past, even the 50% drifting past, the 382, it's quite a bounce already, greater than the 382 in terms of where this acceleration went, the $1,200 down, and it was more than $1,200. 56.26 to 44.23. So I expect that volatility to continue, and we're going to get two-way action. It's not going to be a one-way trip, but keep those spikes up in that metal market. You jump over to platinum. Participating in the bounce, platinum right now, up by 7%, up $145. Now, if you look at the volume, Friday, remarkable in platinum that was the one, 58,000 versus 55. Friday's volume actually was not as much volume. We have volume at the highs, and you accelerated lower on less volume. You take a look at the volume on the metals, gold, it's going to be difficult to match anything like what we saw And it happens, but 557,000 contracts, and you got to back it up to 2 days. Right? We had this October high where you rip lower from that high, though. That's where you got some volume. And then now we have Thursday, the day that the selling started, and then exacerbated into Friday early, and that was yesterday's acceleration lower as well. That's a lot of volume on the downside. We'll be watching this volume, and it's a hot start today. We've already done 135,000 contracts, but be wary if we accelerate lower on this type of volume. Let's see how we bounce here on the volume. You want to see a sign of strength, not just a bounce on light volume. Okay, you jump over to silver in the same way. Even more meme-like. $50 this thing went down in 48 hours. Silver had never traded at $50 in its entirety outside of just a few months ago. And meanwhile, we're losing $50 in value per an ounce almost overnight. And silver had never traded at $50 overall practically up until just a few months ago. To give you some context, if you hear that statistic outside of what we're talking about, right? Whew. Now we take a look at the volume on silver. Even yesterday, yeah, that was a lot of selling on January 26th. That's when we first made the initial thrust to highs of 117.70, but we gave it up completely. All right, we'll be watching the volume on those metals. We jump over to Disney. So Disney had their earnings yesterday, and they got their new CEO. So Parks chief, and hey, the parks are on fire, right? Their numbers yesterday, one of the greatest parts about the numbers was definitely the parks. 54-year-old Diamaro is going to be the next CEO. And they shake things up a bit. And Iger, we'll see the longer-term trajectory. Now, Disney traded lower yesterday. Look at this consolidation this thing's been in. The last time I put this on this chart was June of last year. We're still there. Pretty remarkable, right? This whole area. Now, if you remember the timeline on Disney, that breakout in 2019 prior to COVID, that had to do with when they just announced to the world their plans for Disney Plus. I think at the time it was like $1.99 or $2.99 to join. Everyone's like, oh my goodness, they're going to undercut Netflix and just open it up to the masses. They didn't know the business plan prior to that. They could have went premium. They could have went $14.99 a month. Nobody knew. Market loved that. You accelerate higher. COVID hits. You accelerate higher when this thing launches in November practically. Then COVID hits, and then you accelerate. So it was all euphoria. And it turned out that the streaming business, yeah, they got a lot of streaming customers, way more than you would have anticipated, which is what this run was up to 150 initially. But that entire business, folks, because I was looking at this morning, I mean, check out this chart of Netflix. That's a monthly. That's trouble, man. You put it on any time frame. Look at this weekly on Netflix. My goodness. So, and then Paramount Skydance giving up all the gains back to 11.18. S&P's up by 9. We're coming right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
And when it comes to Disney, so that's taking place March 18th, and Iger will remain on the board. But yes, March 18th, that new CEO takes over. Now, PayPal, how about this one? They're going to have a new CEO as well. They're down 17%. Their CEO, yes, failed to meet targets and streamline the payments is what they're talking about. So the turnaround plan fails to meet the targets. And yeah, let's jump over to PayPal this morning. So you're trading at $43 right now. Oof, look at this thing. Oh man. Oof. You're coming into wow. Let's see where we were. March of 2016, 10 years for a company like PayPal. Okay. So earnings per share, $1.23, revenue $8.68 billion. They miss across the board. Growth slowed to 1% in the fourth quarter, down from 6%. They're not growing in the payments space. All right. Well, they're not growing. When you look at a risk-reward perspective, it's like you always look at expectations, right? And, at a certain price, you can be a buyer of almost any equity, and at a certain price, you can be a seller of almost any equity, and you should. Equities get overbought and oversold all the time, regardless of how you feel about the overall future. Now, you want to be in a growing industry and a growing equity. PayPal's not there, but you start looking at this equity. You start looking at this equity given back 10 years. They have new leadership, okay? And yeah, I'm going to look for a little strength there at some point, because the only way it can get worse for expectations than growing by 1% is if you're shrinking. And that's the path they're on to. But man, down almost 18% today. And yeah, where does this thing go? You're breaking any lows this thing's traded at, and they are not growing. That's a monumental problem for a company that's currently valued at $41 billion. Yeah, Amazon with a big day yesterday. Right now we're trading higher by about 50 pennies. We take a look at the volume. Would have been nice to see a little bit more volume in that move higher yesterday. You look at the way this thing just traded lower the last couple days, even on a daily basis. We take a look at the weekly. Some nice strength from their earnings a season ago. Now they have their numbers this week. It's been a nice little consolidation since those numbers. Right? You accelerate higher with volume. You break above the earnings we had in July. You do it with volume. We pull back on lighter, and we chop around and consolidate. Check this out, how we just completed a 1-to-1. If you take the lows back here in 2014 and you run it, that was the exact same price movement. Your April tariffs, you come back and test the highs of 2020. And that's their volume. Some nice volume on Amazon at the highs here. And Amazon's been an underperformer. Now, you were trading at 241 in January of last year. You're trading at 242 right now. You get Google. Now, Google, not an underperformer. I mean, that's a great comparison, right? You look at Amazon, barely above where you were trading at 2025. Meanwhile, Google has added $150 to the share price when you started it at about 190, up by like 80%, 75% on the year. Now, a little bit worrisome on a monthly basis, right? A slight drop off on a continual basis. You take a look at the weekly on this thing, not as pronounced. You got a lot of volume on the way up. Look at this sign of strength from November up to 300. If anything, you could say that this last little acceleration higher has been a little light. We got none of these spikes above 150 million, no spikes above 125. Really, we chopped around at 100, and you can see how often we were getting bigger spikes on a weekly basis on the way up. Haven't had that happen since we've gotten above 328. Right after the holidays, you start accelerating. That was Christmas, New Year's. You look at an equity like this, folks. We'll take a look at metals when we come back on the next break coming up. But you just want to always be prepared for where markets can move, even if you don't think there's a high preponderance that they're going to do it. And the point being, right, gold's getting a nice bounce today, okay? But I think a lot of people in the metals market might be underestimating the pullback that is possible, even if it's only a 5% chance of occurring, 10% chance, right? You get a $1,200 move gold in 48 hours. Don't think a lot of people were ready for that type of a move. And that was just 48 hours. So you always want to be planning for where you can go, because it has been a heck of a move. And you look at Google, okay, you want to have some exposure to Google, folks. This thing is a behemoth. Gemini, okay, is crushing everything. Even Tommy, imagine, Tommy knows the word Gemini right now, okay? He turned 5 yesterday, but at 4 years old, kids with tablets are learning about the power of AI agents like Gemini, Okay, it is remarkable. A 382 pullback on Google can bring you back to 265 in a heartbeat. Even in a bull run, you just traded from 139 to 345 in 10 months. So, longer term, if you're setting it and forgetting it and you're going to be a holder of Google, yeah, I get it. But if you're a trader, okay, and you're in this market, you just want to be planning for those types of moves and have a plan before the action starts because, boy, very difficult to manage some trades as you watch gold trade down $1,400. And right now we're popping. We're already past the 382 pop. The 50% of this entire move down gets you back to about 5,000, folks. And yeah, volatility can be a trader's best friend. But I'd be skeptical if you said that we're not going to have a move like that ever again. Okay, we got yields rising, dollar strength, and still, gold's catching a bit. 10-year at 4.3%. We're coming right back. We'll take a look at some
Sharpening
metals
your
equities.
skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. S&P's up by 8 points at 7,010. We jump over to those metals markets. Jump over to gold right now, up $298, 49.51. Jump over to silver, up by 13.5%, 87.44. Now, Sunday night, folks, Friday, the close on Friday, about $84, $85. So we have not gotten out of that area at all. If anything, we're just challenging this area. We're just above it. We're into that slight pullback, but that's where we were popping to. We got as high Sunday night. Let's get off there. Sunday night, you got as high as 87.92. Okay? And right now, we're just below that price level. There was your Sunday night, 87.92. About 4 a.m., you're as high as 87.13. And just on this acceleration, 89.10 on silver. All right, we jump over to PepsiCo with their numbers. Up by 2.5%, 158.55. Look at this acceleration from January, 135 to 158. Okay, look at this. 160 is going to be an important area. It's just a natural area of support and resistance. You're right up to that area. Let's back it up even further. Look at this run, my goodness. Look at that, right to the 382. Such a nice pullback and a healthy. Hey, you break above this area, 200 is the next target, man. So we look at these numbers. If you're a Doritos fan, you're in luck. They're going to cut the Lay's and Doritos prices by up to 15%. I would encourage you to be careful how many Doritos you eat. They're damn delicious, but not the healthiest snack out there. I shouldn't be talking, but that's hey. And look at this. And they talk about that it's all about listening to the consumer. Well, yeah, so they were pressured by Elliott, took a $4 billion stake. They reached an agreement to revamp the product lineup and make the key brands more affordable. They expect to spend almost $9 billion on dividends and buybacks. They say that they're listening to their consumers, but in reality, they've just been trying to take too much money out of the prices, and they can't sell the products at the returns that they want to sell them at. Cost reduction efforts, reducing headcount. They closed 3 plants, consolidated several manufacturing lines. I mean, they're trimming the ship. They're getting it more efficient, right? That's what you got to do. They're getting more efficient to compete because they're charging people too much money and taking too much money out of it and not efficient enough. And Elliott comes in and, hey, it's been quite a bounce. And look at this. I would pay attention to Pepsi, man. This thing's been a behemoth. And you're getting in at prices of 2021 right now. Just a healthy pullback and another great example. You don't go up forever, don't go down forever. And once you start down, man, a 382 is not that far off from where you can go. So put it on your charts, okay? I mean, my goodness, where do you start the 382 in the S&Ps? Even if you started from the April lows, you're talking about almost 6,200. You're talking about almost back to where we were at the beginning of last year. That'd just be a 382 retracement of a run that we've almost never seen before. We've definitely never seen this level of wealth market wide. Yeah, 61.83, something like that. So you jump over to Pfizer on their numbers. And all about the obesity drugs right now. Not surprising. So, little details is what they're talking about. The limited data released Tuesday means the commercial prospects with Metsera's farthest along drug remain unclear. People lost up to 12.3% of their body weight compared to those on a placebo at 28 weeks. That's not enough for investors to know how it will fare in that competitive marketplace. Yeah, tough to break into this area without staggering data, right? The data today may leave a bit more to be desired. from a competitive perspective. I mean, you're only going to want the best drug out there. Why, if you're taking one of these GLP-1s, why would you take anything but the best? You got to be the best, and the data is probably going to show it pretty clearly. Take a look at Pfizer. So you're trading right now at $25, down 3.8% right now. Oof, we got all this volume at the lows, right? You had a nice acceleration higher. That was in September. That's your weekly. Let's put it on daily. Wait, we got all this volume. Look at this pile of volume down here. Look at this volume. Yeah, maybe look for a test of that 24. Come back down here, test 24 on light volume. But Pfizer down 4% right now. Merck, on the flip side of that. So they miss expectations in Gardasil. Full year sales, $65.5 billion to $67 billion. Yeah, they have a little miss here, but there's something good buried in these numbers. As in, I say a miss. Looking ahead, earnings, $5.15. Market was looking for $5.32 on Merck. Uncertainty around Gardasil. That's the HPV vaccine. China, they're talking about in here, facing competition in China from Merck. And, of course, that vaccine in the press with what's going on with U.S. health officials. The company is preparing for lower prices and generic competition for Keytruda. Yeah, that's going to be a big one. The Keytruda patents are expiring in 2028. And it's amazing how they do this, right? So in September, Merck snagged U.S. regulatory approval for a formulation that's faster and easier to administer. They need a new patent, right? Because the patent's going to expire. They're going to improve that product. The medicine, it's literally like almost a satire the way drugs are run, right? Now the patent is going to be called Keytruda QLEX. It's given in minutes as a shot under the skin. It's a key component of the drug maker's strategy to continue reaping Keytruda's fortunes. Not really how it should work. But nonetheless, sales of that QLEX were $35 million in the quarter. Total Keytruda sales, $8.4 billion, beating estimates, but those start expiring in 2028. S&P's up by 2. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. TFNN.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps off by about 4 points right now. Let's jump to a 10-minute chart. And yeah, a little bit of negative action on the opening bell. We're bouncing a bit in the last couple of minutes. And we got a little volatility to kick things off. There's your NASDAQ 100. We just dropped 140 points on the open. All right, we're off by 41 points right now. The Dow catches a bid, up by 236 points, or 0.5%. The Russell leading the way, up by 0.7%, 2669. You jump over to Palantir. Their numbers as well. Now giving back some of those gains, but still up by 6.3%, up $9 to 156.88. You take a look at this. Now, check out this volume on Palantir, folks. Okay, this is a worrisome trend in this acceleration higher. I'm sure I don't even have to tell you that, right? I'm sure you look at this chart, you say, man, that's a pretty pronounced fall off in volume. And the only times you're getting actually an uptick in volume is the selling that we got in November. Outside of that selling in November, okay, we haven't seen days in Palantir above like 200 million shares. There's one day, December 15th, weeklies, okay, above 200 million shares. There's 1 week, a lot of selling. You go back to some buying. We had some buying here, which is right where we had price-wise, okay? But look at the buying we had in the beginning of this liftoff. Now, maybe this is your beginning. If you can take out last week and do it with volume, and maybe you do, but you're selling off a bit. Be careful on Palantir. Okay, they are blowing away their numbers. They are. But this is a story of living up to expectations for a company that just went 10 times the size in about 18 months. 10 times the size in about 18 months, and that's taken 15. That's after tripling in size in a year. You go from $5 to 15. And then you go from 15 to 150. I'm not even taking the 207. So, and then you look at a volume like this, and that worries me. Okay? So, again, this can be a story of you believe in this company, but watch the valuation, watch the volume. And yeah, we got a lift today, but as I talk, we're giving back some of those gains. Look at this. We just dropped $10 on the open, man. Be careful in some of these equities, folks. Jump back to gold right now, up $289. Jump over to crude. Let's take a look at crude. So crude, you dive lower overnight to $61 and change. We've broken out of this downtrend channel, and it's been some good volume, man. Okay, on price and volume, that is some solid strength in this crude market. For the first time, it feels like crude's really finding a bid. Look at this sustained volume. Right? Look at this chart. I haven't seen anything like it since maybe 2023. There was some sustained volume to the upside. Right? Look at this chart on a weekly basis. Nothing like this. 4 solid weeks of acceleration. You got to go back to almost 2022 to get that type of sustained volume to the upside. You had a run in 2023. That run in 2023, after even the volume, you made it all the way up to $95, and the volume was at 80. Oh boy! All right, we might have higher crude prices coming at you. We jump over the dollar. The important test here is going to be the 98 area. Dollar's at about 97.50 right now. And I don't think the plan was for the president to nominate a Fed chair and the tenure to be pushing 4.3+%. Going to be interesting to see how they navigate this. Chairman Powell's got 2 meetings left. Okay, 2 meetings left. Then Mr. Warsh comes into play. We take a look at the federal funds rate. The Fed Watch talking about the expectations using swaps. Okay, what is the likelihood? Use Fed Watch to track it. And what this is it uses basically what they're charging for swaps. Now, you go out to the next meeting, March 18th, but a 91% chance that the Fed's going to do nothing and stay right where they are, 3.5 to 3.75. Chairman Powell's last meeting, about a 21% chance that we get a cut by then. And then you go out to Mr. Warsh. Remarkably enough, the market is not even sure we're going to get a cut. It's a 50-50 chance whether he stays put or cuts. I can't wait for that meeting in particular. And then you go out to July, and then finally by July, you get a preponderance where 45% we get 1 cut, 21% we get 2, but still almost a 1 out of 3 chance priced in by July that we get no cuts. I just don't see it, folks. I think the risks are skewed. Now, that is going to impact the 2-year. Okay, if you're in like money markets right now, you're in short-term CDs, 3 months, 6 months, something like that, I expect those numbers to drop more than the market anticipates. Okay, I think the likelihood that we have no cuts by the second meeting of Mr. Warsh is very, very minimal. I would not put that at 30%. Okay, you give me the other side of that trade, I'm taking the other side of that trade, and it's out there in terms of where you're at and rates. Right now, you got the 2-year basically flat, 104.04. We look at the yield curve for a moment. Right now you're talking about a 2-year at about 3.58. And there's your 10-year, now sitting at 4.28. Yeah. So you're talking about 70 basis points of steepening, right? Almost 3/4 of a percentage point you got to pay for the 10-year versus the 2-year. And that's a problem for mortgages and everything. Checking on some of the equities with news this morning. Amazon and Google out with their numbers this week. Google, look at this. Google just hits an all-time high, and they give it up a bit on the open. We had 350 and change for the first time ever, just like that. Dropped $6. Google right now, barely in the positive. We check in on PayPal. Whew. Down by 18% for PayPal. Disney on their new CEO, down by 1.4%, 102.80. As I mentioned, all these streamers, right? Look at Netflix. Whew, down to 0.8% for Netflix shares right now. And yeah, Paramount Skydance giving it all back. Down 1.1% right now. Oracle had a good day yesterday in the pre-market. You end up giving it up by the time the day was over. From 175 to 160, down another 2% right now. NVIDIA. Okay, watch out in this market, folks. Look at the leaders. NVIDIA down 1%. Look at the give back we just had. Microsoft off 1.7%. And yeah, whenever Walmart's spiking higher, everybody's getting out of... Walmart's like the new 10-year. I joke. But every time one of the biggest equities are getting slammed, Walmart is where they're hiding. Walmart's up by 0.8% right now. Let's take a look at the heat map as we jump around. Okay. Get a lot of green, but not in the equities that matter the most, right? These chip stocks, you jump over the NASDAQ 100. Intuit off 6.3%. Shopify off 3.6%. Look at this. NXPI off 7.5%. Micron 1.25%. Not Intel. Intel's up 3% today. We'll come back. We'll take a look at Intel. Take a look at some of the chip stocks. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Folks, we got some selling in this market right now. NASDAQ off 103 points. S&P rolls over negative. Russell leading the way up by 22 points. In the world of mining, Eldorado Gold, they are buying Foran Mining in 3.8 billion Canadian dollars, and it's an all-stock deal. Okay, and under the terms, expected to close in the second quarter, Foran shareholders will receive roughly 0.11 common shares of Eldorado Gold for each Foran share held. And this is the Foran Mining Corp, now trading at 484. Okay, you're up by 6.7%. You jump over to Eldorado EGO, you're up by 6.6% right now. We take a look at this chart. It's a little bit of a pop. Take a look at the weekly. This thing just pulled back to the 382. You just touch that area. We're right back to where we were in December on that pullback, and we're bouncing a bit. It's only Tuesday, and look at the volume we've done in some of these equities so far. It's going to be an important week because you ever get a bounce on volume, it's going to be very bullish, okay? But it's Tuesday. Look at all the volume that we got in some of these equities to kick things off. Remarkable. We jump over to Archer Daniels. Their numbers as well, down by 4.3%, but they catch a bit on the open. Look at this acceleration. From 61 to 65.11. They expect its first annual profit increase since 2022, even as weak crush margins and a delay on U.S. biofuel policy continue to weigh on the results. Some of the other news out there, you jump over to Uber shares, down 1.6%. All right, this market's selling off, folks. Protect yourself in these equities as well. You know, the moves taking place. We got a lot of volatility right now, whether it's gold, okay, whether you're talking about the NASDAQ, S&Ps, we still got Google and Amazon earnings. Man, we just dropped 300 points in the NASDAQ from where we were when I was getting ready for the program. Folks, thanks so much for tuning in, kicking off your trading day right here with me on the Morning Market Kickoff. Stay tuned. Basil Chapman, he's in the saddle next for the Tiger Technicians Hour, folks. Steve Rhodes live at 11, Fast Market at 12, Larry Pesavento live at 1 o'clock, and I'll be back at 3 o'clock for the Tom O'Brien Show, folks. Stay tuned. Basil Chapman coming up now. Have a great one, folks.